Futures are higher after the U.S. economy added more jobs than expected in June. Here, the data slightly tempering expectations for a rate cut in September. Over 71% of traders are betting on a cut all in, but that's down from before the report's release. For more on this, let's bring in Justin Bergen, who is the Ameriprise Financial Vice President of Equity Research here. Justin, thanks so much for taking the time here this morning. Let's just start off with the data that we saw come through in the jobs report here. I want to get your read in on it and what this signals for the pathway for rate cuts.
Yeah, absolutely. Thanks for having me this morning. I think one of your previous guests made a comment on fireworks, and I hope you saw him yesterday because it wasn't this morning. It was just a good report, right? I mean, you're adding over 200,000 jobs in a month. Your unemployment rate ticking up slightly, and your wage growth, that's 3.9%, right where it should be. So if you could put it in a what could go right, that out of that report, it sure beats what we got last month when there were quite a few fireworks.
Justin here, good to see you. I'm just going through the street reaction on this report. When do you see, or do you see, an acceleration in the economy, maybe because of higher stock prices and tighter credit spreads? That's some of the chatter that's coming into my box right now.
Yep. So actually, GDP is slowing, right? So if you look at where we were last year, our consensus forecast this year is for 2.1% growth. That's down from 3.5%. But if you look back at some of the previous periods, you go to 2018, 2019, when you had similar 2% GDP growth, and then you had wage or unemployment that was above where it is today. You had job growth below where it is today, and consumer spending was still strong. So to have a 2% GDP growth rate for the economy, that's a good place to be in.
Why is the unemployment rate going up?
But the Fed wants job growth to slow, plain and simple. It's not great. You have some of the low-end consumers that are being stressed, but you do have unemployment rate for the last 50 years has been, the average is well over 4.5%. So to be at this, below 4% for too long, it's very, very, very hard to have that type of wage growth.
What are the other characteristics then of normalization if we're getting back to trend on markers such as the unemployment rate?
Yep. So I think if you look at consumer spending, that's coming back down. You have the savings rate, that is coming back down. And I think if you kind of focus and shift at the earnings growth, you have 11% earnings growth estimates for this year. That's fantastic, right? I mean, Q2, you're looking at 8.8% growth. That's excellent growth for corporate profits. And you look at the profit margin, that's a 12% expectation for Q2. That's actually up quarter over quarter.
Is this report bullish or bearish for stocks?
Pardon?
Is this report bullish or bearish for stocks?
I think it's bullish, absolutely bullish. I think if you look at, that's what economists want to see, is this slowing, gradual slowing of the economy. You have a job market that's not imploding. Consumer spending still continues to be strong. Corporate profits are strong. That's why the market keeps hitting highs. And if you have this 10-year coming down from 450, where it is now 430, 428, that's what they want. Lower rates is good for the economy.